Good morning, good afternoon, ladies and gentlemen. This is Greg Michalowski from FSTD, and this is a Wednesday, March 10th, 2010, New York closing Forex report. I remind everybody that trading Forex is risky and should only be done with risk capital. Not change your lifestyle. Traders could lose all their risk capital. Trading Forex, FSTD does not guarantee any recommendations made within this commentary. Traders should make market assessments and take trading positions based on their own personal market analysis, risk tolerance, and financial condition. In addition, care should be made to only use leverage which is congruent with your personal risk tolerance. Although care was taken in creating this report, FXC does not guarantee the accuracy of the information. Well, we did just have the New Zealand interest rate decision come out. That came out as expected, no change in rates. And they also commented how they expect to keep rates unchanged through at least the mid-year. The comments were largely as expected, and we did see the New Zealand dollar react first a little bit to the upside and then back down to the downside. Taking a look at that currency pair, you can see that we had this spike up here through before the number, then the number or the release came out. The market moved a little bit higher, and then boom, right to the downside here. We have retraced 61.8% of the move up from the two-day high, low to high range. This low from there to that to there, and we come 61.8% retracement of that at 70.12. Currently trading at 70.20. And also we are near the closing level from yesterday. That closing level came in, let's see here, at the, if I can get up here, at around the 70.24 level. So the market's basically unchanged on the day after that rate announcement. Taking a look at the hourly chart in the New Zealand versus US dollar, we do remain well above the 100-hour moving average. That 100-hour moving average comes in at 69.82, and so we'll be looking for the market, if it should break through the low here today, gain further momentum to the downside, get through this 70 level, which is a 38.2% retracement. At this move higher, we should head on down toward that 169.82 level. Taking a look at the daily chart in the New Zealand versus US dollar, kind of right in between the 100 and the 200 bar moving average or day moving average. We have maintained, or we did maintain, the support against the 200-day moving average for the previous 2 days, but then today we moved higher in anticipation of this the interest rate announcement. But when it gets kind of disappointed to the upside, the market started to correct to the downside. 69.63 is a 200-day moving average. That would be another support level for that currency pair. On the top side, we do have this old trend line, which comes in around where the 100-day moving average comes in at 71.62. The trend line actually comes in lower below that level, currently at 71.57. So that would be our top side resistance off the daily chart in New Zealand versus US dollar. Taking a step away from there and taking a look at the euro versus US dollar, this currency pair initially sold off to the downside here today, and the good news is we came down toward this support level, the 61.8% retracement at 135.51. This is of the move over the last couple weeks, or last 3 weeks actually, in the euro versus US dollar. This area, this piece defines 3 weeks of trading here. The low to high range occurred on 2 successive days, but that is the low to high range over a period of 3 weeks for the euro versus US dollar. So the fact that we came down and tested this support level once again, 61.8 at 135.51, and held that level is good news for the euro versus US dollar. And as a result, we did see the move back up to the upside. Of significance as well in this report is the fact that the market was able to get through some of these, the 100 and the 200 bar moving average. I'm going to get rid of some of these lines here. It's getting a little bit cluttered here, but I do want to keep in the 136.54 level. I do want to keep in the 136.91 level, but the level that I'm most concerned about is this 100 and 200 bar moving average on the hourly chart. The market has been able to stay above that level, and that's a good sign. So we did see the move to the upside, and as long as the price can remain above this these levels, which come in at 136.13, we should see further upside potential for the euro versus US dollar. So maybe we'll get that break, maybe not, I don't know. But We did see the euro come off here today. That was on the back of gold prices. Gold prices actually fell rather precipitously, and it kind of reversed the trend. Now, in the past, we've seen when gold prices come down, um, uh, that is bullish. That is bullish for the U.S. dollar, and that's exactly what we saw here when the gold prices started to come down rather sharply. We also saw the movement in the euro to the downside as well. This was that sharp move to the downside in the euro, but then it started to rebound a little bit here, and that is, that's telling. Now we are getting, we did take a look at this 5-minute chart move below this old trend line here, so we'll be watching that very closely here, but we'll also be watching the support down here at the 35 level, and again at 13 level. This is a key support level for the euro versus US dollar going into the overnight session. So let's take a look at the sterling versus US dollar, and this currency pair, although down on the day, retraced a lot of the movements for the day. Yesterday we did close at the 149.95 level. The high for the day, at least during the New York day, was 149.92. So we did find some resistance against that 149.95 level. Also against this 50% retracement at 149.88. The current price is trading at 149.59. We have support at 149.39 down below, which corresponds with the 61.8% retracement of this move up over the last few weeks in the sterling versus US dollar, as modest as it may be. That comes at 149.39. We also held the support today at 148.80. So now off this hourly chart, we do also have the 100 and 200 bar moving average coming in here at the 150.34. That would be a target on the top side if the market's able to get above this 149.88 level here tonight. So we'll be looking for that move toward that 150.37 level if indeed we get a further move to the upside. Now let's take a look at the 5-minute chart. And it was a tale of two cities here today. The market started to move down using the 100-bar moving average as resistance. Then we started to use it as support, and we tested it 1, 2, 3 different times here. Last time in the last half hour or so. So we do have support here at 149.51. We'll see if that level can hold, and the market can gain some momentum to the upside, getting above this highs here that we saw. This 94-ish type area for the sterling versus US dollar, move toward that target again at the 150.37 level, where the 100 and 200 hour moving average come into play. Let's take a look at the dollar versus yen. Dollar versus yen. The good news is we got above the 100-day moving average today, back again after moving below it yesterday. That level comes in at 90.14. Let's go to the hourly chart, and you can see the 90.14 level here. When the market moved above it, it moved higher. That was as predicted. For those people who are aware of that, could have made some decent money on that break of the 90.15 level. That level also is important on this hourly chart because it represents a 50% retracement of this move down from this high right here to this low right here. 50% comes in at 90.13. So we have the 100-day moving average at 90.14. We have the 50% retracement at 90.13 off the hourly chart. So that's two reasons why you should have bought the market at 90.15, and lo and behold, the market moved higher from that level. You can see 90.15 right here. Market went up, tested 15, and then to the top. Actually, it comes in right here, 90.15, and then moves up to the top here, moving higher. Now, taking a look at this 5-minute chart, now that we have it up here, the market has been kind of trying to get below this 100-bar moving average, but we're not seeing the momentum to the downside here for that move. I'm going to take rid of this Fibonacci here, take that out of there, so we do need to get back above that level, and actually we're trying to get above it right now at 90.45. So we'll be watching that level as we in the early session. If we're able to get above that level, get above the 60 level, which was this floor here until we broke, and then we painted the ceiling, we should see higher levels in the dollar yen, continued movements to the upside for that currency pair, which could ultimately bring it back up to this 200-day moving average. 200-day moving average comes at 91.92. That would be on a longer term perspective. Moving over to the Aussie versus US dollar, this currency pair had some, made a new high here today, but try to test these lows here, and actually went through these lows at 91.39 was a close from yesterday. We got a little bit below that level, but have rebounded. So we're going to be watching 91.39 here in the early session. We've seen paying attention to that level on the on the downside. Here, this happened before the New Zealand announcement. This spike to the upside, but the market is also staying below that 91.55 level. If we can stay below 91.55, it looks bearish for the Aussie versus US dollar and on a correction. Get through the 91.32 level down here in the bottom. That's my report. Everyone have a great night. Bye.